Well, good afternoon then everyone, as we are at the end of another week of trading on Friday the 9th of February. We'll flick across the calendar, although it's not really much for us to look at in the calendar, not really too much to go through this week. It's been a week where we've been pretty bereft of any lacking any kind of fresh fundamental drivers. I mean, there's nothing really going on, much to really talk about. It's kind of strange to sit there and say that in a week, but not a lot out of any of the major economies, really. I mean, a couple of comments here and there, but I mean, the main focus of attention this week, probably the RBA and inflation out of China. But I mean, you see when we get across to the charts now in a minute that really nothing's really impacted markets too much. I mean, this services PMI kind of set the tone for the week, certainly in terms of stock indexes. The dollar's not done too much, but we'll have a look at that as well. Really, I mean, stock index has been trending higher this week, but that's nothing got to do with anything on this calendar, any comments out. It's just generally, recent trends. If you look back to the week ahead video on Monday, we were looking at stocks higher. We were hoping to buy back into the US dollar. It hasn't quite materialised yet, but that bias still remains the same, and you kind of feel the same heading into next week. Although we have had downward revisions to a couple of CPI prints from the back end of last year. Core CPI for Q4 got remained the same. It's not a number that was out on any of the calendars. I mean, it's kind of set markets a bit kind of chopping about. Set equity markets a bit higher, US dollar a bit lower, kind of in recent trades since about half one. So we'll have a look at that as well when we get around to it. But services PMI came in consensus 52, previous 50.5, actual above both of them at 53.4. So it's just another positive number from the US, which reinforces the soft landing narrative. Again, does that mean that they're going to cut interest rates as much as markets first hoped for? No, but if they can cut interest rates into an economy that is performing well, they've still got strong labour market. Inflation's still a little bit sticky. Still got strong labour market, still got strong consumer spending, still got strong services sector, manufacturing sector. Household net worth in the US is near the highest it's ever been, or is the highest it's ever been. So, there's lots of things throughout the US economy that keep us trucking along. And if they can cut, as I said, if they can cut interest rates into an economy that is performing well, then that is a situation where stocks will probably continue to go higher, and they have this week, as the S&P 500 has claimed that 5,000 round number. The RBA, not too much to be seen with the RBA. Did kind of remove the rhetoric around hike again. They kind of just suggested they're not really looking to hike again. They will still be open to it if inflation starts to push higher. Inflation still isn't where they want it to be, but they removed a sentence within the statement suggesting that further policy tightening will be necessary or may be necessary. I don't seem to think that is the case, and I could have told you that a few meetings ago. But inflation's still a little bit too high in Australia, but with the inflation then on China, that is likely to continue to cause downside in Australian inflation, and probably then global inflation, as well as that previous minus 0.3, consensus minus 0.5, actual minus 0.8. Now the month over month figure did tick up by 0.3. This is down by 0.8. And that is the lowest print in the year-over-year CPI print from China in over 14 years. So Chinese economy continues to struggle. Stock markets continue to move lower on Monday, but then on Tuesday morning, out of the Chinese state-backed equity purchase, the state-backed purchases of the stock market. As Chinese stock index pushed higher over the course of the week, so I don't really care about the inflation print too much, but that's a little bit of news. Chinese stocks higher, and then the regulators come out and ban short selling. So not real surprised to see Chinese stocks finish the week higher, but we'll have a look at that when we flick around to the chart. Unemployment rate out of Canada, consensus 5.9, actual 5.7, previous 5.8. It looks like a good number on face value, but once you dive into it and have a look at it, it's all part-time jobs. People have come out of full-time employment and gone into part-time employment. So the unemployment rate has ticked down. A lot of that is part-time jobs, so not as positive a number as it first seems. You can see across the board, I mean, your Aussie, that was kind of NFP last week, and Aussie continued lower slightly. Kind of Tuesday morning turned around and just kind of chopped sideways with the dollar this week. You can see Aussie with Kiwi's been kind of pushing higher a little bit. Positive labour market figures from New Zealand, but See euro, sterling, a bit all over the place. Dollar index, bit all over the place. Dollar Swiss grinding higher, albeit a bit all over the place. Dollar CAD up to start the week, then down to finish the week. Again, just doesn't know what it wants to do with itself. Dollar yen continues its moves higher. The Bank of Japan's Deputy Governor Ushida, should I say, did suggest that when Japan was it Tuesday? I think it was Tuesday. Was it Wednesday morning? Did suggest that when the Japanese do end their negative interest rate cycle, to not expect aggressive interest rate hikes after that, which markets thought we may get. That doesn't seem like we will get. And we'll look at the bond market sideways, bit all over the place, and not too much to see there. Oil has started to push higher again, which is, oil pushing higher is an interesting one. Not too much of a reason for that move lower. It's not really too much of a reason for that move back higher, apart from kind of Middle Eastern tensions continue. There was talks of a ceasefire out in Gaza, but ultimately it's not really a lot to kind of send that either way, to be perfectly honest with you. Where the movement has come is equity markets, and that's just where you got to stay. Long equities, never a bad idea at any time of the day, but for reasons that I outlined earlier, S&P, the Dow Jones, the Nasdaq, the Russell, all kind of pushing higher. Has continued their moves into this week. Do have some inflation, do have CPI out of the US next Tuesday, so we will keep an eye on that. But for now, bias is still tilted to the upside, with stocks tilted to the upside, with the US dollar probably still tilted to the upside, with bonds as well, which is not something you get too often out of the major economies, but that is the situation that we are seeing at this current moment in time. But it's kind of really where we're at. No real fresh fundamental drivers, nothing really of note on the calendar, or kind of just general news flow. US dollar's not doing too much. Equities just continue to move higher. No surprise whatsoever. But I don't see it waffle for too much. Really too much to talk about over the course of this week. Hopefully next week is a bit more going about CPI next week. We will update further on that when we get to it. But have a nice weekend, everyone. Do recharge the batteries, and we'll be back next week for another week of trading. Thank you.